late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, but me some focus. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I want to address a question I had within the Telegram community. So someone reached out kind of asking me to clarify what I mean when I look at multiple time frames when it comes to entering positions. So I kind of just wanted to break down my thought process and show a couple of more recent examples of how I like to utilize multiple time frames depending on what kind of trade I'm looking at. So right here, I just drew up this flow chart here. We see how to determine ideal trade type and duration. So the first thing we need to do is identify what type of trade are we looking at. So to me, that's how long am I planning to hold this trade? Is it an intraday or a scalp trade, which means you're kind of just targeting a very small move. So low time frame, you know, this could play out over a few hours. It could play out over a couple days, but you get the idea that this is a very low time frame trade and we're just looking to capitalize on a quick move up to book some profits. Whereas our longer term trades, we're looking at capitalizing on more of an actual macro trend. That being said, all of the same tools and skills that I do teach to show you basically that we look on the high time frame, this can be applied to the low time frame as well, and I do scalp and trade as well. For me, it allows me to not only increase my returns if done successfully, but it keeps me sharp. It allows me to practice all these skills. The more time that you spend on the charts identifying all these different types of indicators, all these setups, price action, the more second nature it becomes and the easier it comes as time goes on. You start jumping on the charts right away. You can identify if that's even worth looking at. So lots of the times you just flip through the charts, you spend a few seconds on each chart and really recognize straight away, okay, this is a bullish setup or likely a bearish setup, not interested, or I am interested. And then you can really, you focus on the ones that you think are going to perform very well and then ignore kind of the rest of the noise. So here in the intraday or scalp, we're looking at a few different time frames that we want to use. For me, if I'm scalping, I'm not doing a crazy scalp most of the time. Sometimes, you might be looking to scalp a range for a certain amount of time. If you want to spend a day scalping pretty aggressively, you'd be using a even lower time frame here. So you might even look at a 3 to 5 minute time frame as your lowest here if you're an actual, full-time scalper. But, it's the summer, the weather's nice. I don't want to spend all my time scalping trades right now, so I'm looking at more of kind of these intraday and still considered scalp trades. We're still targeting a small move, but intraday, we could have the potential to hold these trades for a few days, see what plays out. So basically, we're looking at the 4-hour time frame here as the highest time frame relevant to this specific length of trade. We also take a look at the 1 hour, and we've got a low time frame as well. So ideally for each trade, you want what is considered a low time frame, a medium time frame, and a high time frame kind of different chart you want to pay attention to. So on the 4 hour, we come on, we identify the setup. So maybe we've seen a long downtrend finally breaking out on the 4 hour. A 4 hour time frame is enough to sustain moves over the coming days, if not even up to a couple weeks or longer. So 4 hour, we see here, we start to see that setup presenting itself. The indicators have reset, so we talk about the ones that gauge overbought or oversold. That's the RSI and the MACD. And then we also have the trend and the momentum. So we've got our vortex indicator and our directional movement index. If those look nice and reset and look to be presenting a bit of a bullish setup there, we're not going to chase initially. What we need to do now, we're going to go into the lower time frame. So we take a look at the 1 hour chart here. Because we want to ensure we're getting the best possible entries, we need to take a look at the lower time frame. What you need to understand about this is that for the price action to translate to the higher time frame, it needs to maintain itself on the low time frame, if that makes sense. So what we need to see, if we're looking looking for a continued uptrend on the 4-hour chart, you want to see that being supported on the 1-hour chart as well with that indicator confluence. So indicator confluence between multiple time frames really tells you that, okay, we can support this move up on the lower time frame, like the 15-minute and the 1-hour, so that's going to gauge the next few hours, or if the next kind of 24 hours of price action. And then if the 4-hour also has room to run, that allows us that multi-day sustainable run. But as I said, the 4-hour might look a little bit extended if it is a breakout move. So that's when I move to the lower time frame to try and look for my initial entries. So the initial entries are going to be a little bit riskier. You're entering kind of on the lower time frame. That's why I like to use stop losses to protect those positions. Stop losses always kind of go under initially midterm support in the least. Ideally, if you can have it under the 4-hour or the higher time frame support for that trade setup, that's going to give you a lot more ease of mind. It's going to protect you from those volatile downside wicks that potentially could take you out of a position. The reason we don't really use the 15-minute in terms of our initial stop loss and entries is, we can use it for the very initial entries, but you want that stop loss protecting it as well. So again, look for the confluence between these. We identify our setup on the 4-hour. We see it's nice and reset, ready to run a little bit here. But we also then see that it's broken out. Maybe it's a little bit extended on the 1-hour. In that case, you wait for the price to come back down a little bit more to those support levels on this time frame. And then those could be the initial entries as well as stop loss supports. And then from even lower down there, if we take a look at the 15-minute, we can really identify when that early trend reversal signal starts. We could take initial entries depending how aggressive you want to get on these scalp or these very low time frame trades. You might take your initial entries on the 15-minute. If I'm looking at a bit of kind of a multi-day trade, I probably want that confirmation on maybe the half-hour chart or at least the hour chart, something like that. But you kind of get how we use all the different time frames to really paint a big picture of what can happen in the near term. So we want that uptrend to be sustainable from the low time frame all the way up to the high time frame. There's going to be times within that uptrend where we come back, we retest those support levels. So that's when we pay attention. We want to make sure our mid time frames are continuing to support our overall thesis. So we keep that uptrending price action. We still have that indicator confluence, and we are now able to hold our entries. We can keep our stop losses below that mid time frame support and protect those positions. So similar here for a midterm or a swing trade. Looking at a medium time frame kind of thing, you might hold this for a few days to weeks. We're looking at the 1-day chart, the 4-hour and the 1-hour. Very similar here. So identify the setup. Ideal confirmation will be on the daily. That being said, if you're taking a swing trade and you want it to play out over a few days or a week, if you wait for that daily confirmation, you're likely going to miss the best ideal entry. That being said, it will have less risk. So you have to understand with higher time frame confirmation comes less risk. So it really, you have to gauge, what type of trade you're looking at in terms of type, duration. You also have to kind of gauge your own personal risk level. Are you trying to get in those aggressive entries early, protected by stop losses, but with the potential that it could break down on that lower time frame and take you out of the position? Or would you rather just wait for that higher time frame confirmation, get in when we do have it, and then ride that trend to the upside? I like to use kind of a combination of both. So I might look for my initial entries here on the lower time frames. So we see on the 1-hour and the 4-hour, we start to see things, start to reset themselves. The indicators reset. Price action looks like it wants to reverse. We could take an initial entry. We protect it with a stop loss underneath that medium time frame structural support. So maintaining higher lows. And then we wait for confirmation on the daily. When we do get that confirmation on the daily, what we want to do is essentially look to add to our positions. So we get our foot in the door nice and early. We've protected that position with a stop loss. Price starts moving up, and then we can look to kind of look for that confirmation on the higher time frame. We start to get it. and then we see that we get this nice entry on the higher time frame. We are able to buy into that with more confirmation and lower risk, potentially with more size if you're trying to really focus a lot of your buys on the higher time frame confirmation. But then what you get is a nice blended cost basis. So an adjusted cost basis, you had your buys in here on the 4-hour early move, you caught that, protected it, and then we add to it. We now have a nice cost basis. We have a stop loss that could be in profit already protecting that position, and we've brought our average cost of the overall position down between the multiple buys. So that's how you can kind of use multiple time frames. Take a little bit of risk early on, make sure you're protecting it with a stop loss, and then when you get that confirmation on the daily, although don't buy into resistance, don't buy into something that's pumped up like crazy. We just wait patiently for those entries to come back, and when we see it, we get our indicator reset. Looks like we're going to bounce and continue that higher high, higher low uptrend price action. We can continue adding to those positions. So don't be afraid to add to a position just because it's in an uptrend, but you have to do it strategically. So we're not just going to buy blindly into the uptrend. We want to buy into the retracements during that uptrend, but we need to make sure that the high time frame structure of that trend is maintained, so those higher lows, higher highs continuing. And then last but not least, we have a long-term or longer-term trade. You might be looking at holding this for a few weeks, a few months, even years. It really depends. As I said, every setup's going to be slightly different, but the premise remains the same. 3 kind of different time frames to be watching. We've got the 1 month, identifying those macro trends and momentum, identifying whether something is overbought or oversold, and then we've got the 1 week. That's our ideal confirmation for larger entries, looking for that indicator confluence with the monthly, as well as potentially utilizing stop losses. That's kind of going to be later in the trend. Initially, you're going to want to put those stop losses in on the daily. So there's been a few moves. I'll highlight a couple on the Bitcoin chart here in a few minutes, as well as the SPY. But essentially what we saw was warnings on the higher time frame. So we started to zoom into the lower time frame to really pay attention to that price action and look for the confluence, determine whether it's just a temporary downtrend in the macro side of things, or if it could be a sustainable retracement. So one day here, identifying early trend reversals, entries, they're going to be slightly riskier until you have that confirmation on the 1 week. That being said, daily price action is pretty strong, so we can enter our positions on that, and we do lots of the times with some of these longer swing trades, and then looking to add to it on the weekly confirmation. So also entries, stop loss support, early initial entries, all can be targeted by utilizing a multi-time frame approach. So I hope that makes sense. We have the high time frame, identify that setup, look for the indicators that tell us if it's overbought, oversold, and where the trend and momentum is heading, and then zoom into the lower time frame, look for confluence between all of those indicators, look for the supporting price action, and then look where it might make sense to put those technical stop losses or take profit levels. I'm going to flip over to the SPY here. So what we're going to do, starting on the monthly, what we see, so this is just a couple different instances that I've highlighted of weakness. We saw right here. So I've marked it already, marked this chart up, but what I wanted to show you is we start on the monthly. If you just look at this chart, it's really hard to gauge. If you missed your entry down here, it's kind of hard to be buying up here. That's kind of the problem with just focusing on the high time frame. People get so caught up on it, and by the time something has moved, like even this right here, this move in a month is pretty crazy. Anyone who missed the lows down here, so if we weren't paying attention to that daily chart, we wouldn't have got our buys in at 485. So we pretty much almost nailed the bottom because we took a multi-time frame approach to the market. Right now, those are up almost 22%, so we're sitting nicely in profit here. But if I was just watching the monthly chart, I likely would not have caught this move. So that's why it pays to pay attention to multiple time frames. But we did see this this indicator here. It's the parabolic SAR, so it is kind of measures the trend and momentum. When we have red dots underneath, that means we're in an uptrend, and when we have the red dots above here, that signals that downtrend. So right here, you know, we had that print, so that was that definite warning sign that we were losing momentum on the higher time frames. So warning signs there on the monthly. So what we do now, we flip to the weekly. We need to take a look and see. So we pull up all of our indicators. And I'm going to just, because I want to reference this compared to this prior period of weakness and show you all the similarities. Basically, we can kind of see that history tends to rhyme or repeat. A lot of these technical setups play out time and time again. So what we saw over here, that bearish divergence, so higher highs on the prices, bearish divergence, lower highs on the RSI. We saw RSI getting to that oversold territory here, and that bearish cross, initial bearish cross right there. MACD overbought and got that bearish cross. And here, look at our DMI. This is where the orange negative line broke above the red ADX line, signaling that the bearish momentum was picking up. It was then able to break above the DMI positive line. So that's that signal that the bearish momentum and trend is picking up. And then so we've got this signal here warning us. We see that the oversold or the overbought nature of the SPY at this time was a little overextended based on the MACD and the RSI. We also recognize that the MACD and the RSI are lagging indicators. So just because this flashes a bearish cross right here or a bearish divergence right here doesn't mean that this is when the downtrend takes place. It just signals to me that the uptrend is losing its momentum, and we're likely going to go into that consolidation period, which is what we saw over here and what we saw here. So pretty much we came up, we had our bearish cross, we tried to retest it, we got rejected, and then we got rejected underneath the RSI moving average and held underneath. So you can see rejection underneath here, rejection underneath here, and we see a definitive breakout of the DMI minus line here. So that's that really bearish trend building. So breakout by the DMI, that's not a good sign. We have the ADX line going up, trending up, which tells me that's a strong trend for that bearish momentum. We see our vortex indicator has also broken out here and become the dominant moving average here. So all of these signals tell me, you know, the RSI and the MACD and this signal down here, the DMI, they warned me that the bearish or the bullish trend was slowing down, losing momentum, and then we got the confirmation in through here when we got rejected, and we had our definitive breakout of the DMI negative line supported by a rising ADX trend. So what else? So let's look over here and we kind of see we got stuck in the downtrend since then, eventually breaking out, holding above it on support, and then continuing from there. So we had a similar setup. Look at this, bearish divergence, bearish cross of the RSI, rejected, bearish cross of the MACD, rejected. We see here the vortex indicator breaking out with that confirmation, the initial break of the DMI breaking above that ADX line, as well as the confirmation breakout here with that rising bearish trend. So very similar setup to over here. That's what warned us. That's why, you know, we took a lot of precautionary measures here, de-risked ourselves, really paying attention to a lot of these different indicators as well as prior setups has allowed me to kind of protect myself as well as take advantage of the opportunities as they come. So here we saw eventually price was able to break back out of this downtrend above the 50-day and the 200-day, holding it as support and then continuing up from there. So we could see something like that happen again. I've got this zone marked here. So that's where I'll get into the even lower time frame things here. So we see we've broken out of our downtrend for now. We're above the 50-day and the 200-day. So where is the most likely placed for another entry for that higher low entry? Something like we saw over here. So we can just take a look at the chart. We're going to zoom into the lower time frame here. So we've got the daily. And why we do that, it just looks a little bit different here. We see, just all this price action. So we're uptrending on the daily price action. What we can see is that, I'll show you here, but we have had this Fibonacci retracement, came back, tagged that 618, so that has played out. So the next Fibonacci retracement that I'm looking at is from this swing low to this swing high, and we've got this zone marked right in here. That's our Fibonacci golden zone. So looking at an entry here in that 538 down to about 524, that's going to be a good opportunity for back testing this breakout. And then we can see here on the daily, it wouldn't be the best for the daily price action, but it would be a nice retest on the weekly, and it would be a higher low on the weekly. So just because price action starts to kind of break down on the daily doesn't necessarily mean that position is in a lot of risk. That's when we need to take a look at the other indicators. So we take a look at the daily, and then I'll pull up all our indicators. Sorry, we can see here. So RSI, we're getting higher highs, which is good. MACD continuing up. The bullish trend is kind of remains dominant here for the Vortex indicator. And also what we see, the blue DMI positive line breaking out here, and we see the red ADX line starting to curl up. So it could look like we're building a bit of a momentum or a bit of trend here on the daily chart, assuming the Vortex indicator can maintain this structure and assuming that we can ideally hold these higher lows. That being said, we could still come back to this region down here, retest this on the weekly, and continue on the high time frame from there. So you really need to kind of pay attention. It's hard to gauge, where you put your stop losses. I like to use, that medium time frame structural support. So for me, we're riding this up. We've got this move right here, potentially coming back into this level. For the SPY, I wouldn't really be too worried. I would rather just add to my position here than worry about protecting it with a stop loss. We had those buys down here. I'm super happy with them. I'll continue just riding them up. Wait to target this region in here. And then if we do come back, that's going to be where you want to buy. So essentially though, we could see, the daily chart that if we do come back to here, we break that daily uptrending structure. So just waiting, and then we want to see if that does happen, what does the weekly indicators look like? So if we come back here and we reset, all our indicators on the daily are reset and looking good, and we flip to the weekly and all our indicators are reset and looking good, then we could be due for just that higher low test on the weekly. Putting a stop loss below structural support. So you can see this low and this trend line are both protecting this position here if you had a stop loss underneath. So that's one potential way we kind of use the multi-time frame to really gauge what's going on in the market. As I said, if I just paid attention to the weekly or the monthly, by the time I caught all of those warning signals, we might have already experienced a lot of the downside. So we saw that from a lot of people during this dip, where actually, price dropped 30%, 20%, and then they started capitulating on the first little bounce we had out of there. A lot of pretty big names when it comes to Bitcoin and crypto selling in the 80s, and it didn't really make sense to me. We de-risked around 100,000, price dropped 30%. We bought back in, and although we didn't deploy all of our cash, we opportunistically took advantage of some of the better buys, in my opinion. We ride those to the upside, we trail those stop losses up, we look for those continued higher lows, and we continue to add to those positions. So ideally, that confirmation on the high time frame is the best for the macro trend. I'm going to flip to the Bitcoin chart here. What we see quickly is, again, if I'm looking just at the monthly, look at this chart. Guaranteed, pretty much a lot of people, if you were just looking at the monthly, you missed this breakout, you probably missed this breakout, and you probably missed this breakout here. So that's why we need to pay attention to the multiple time frames. What we can see here is on the weekly. We can, sorry about that. Just trying to tighten this up a little bit here. So what we see kind of compared to the prior cycle, it's same kind of warning signs, bearish divergence, lower highs, higher highs, lower highs on the RSI. MACD, bearish divergence, losing that momentum on the vortex, and that DMI is also, we start to lose that bearish or the bullish momentum. So right here, bullish momentum favored with the blue line on top, backed by the ADX, but we started to lose it. We started to lose the trend momentum with this trending down. We started to put in those bearish divergence price patterns, and it was just enough warning signals on the high time frame for me to look at the lower time frame. And we see right now, though, we are kind of reset. We see the bullish trend is a little more dominant here based on the vortex and the DMI. We see we've got a bullish cross of the RSI and the MACD, so we have to continue following this. That being said, if price comes up and puts in a new high here, that's an extension, and let's say RSI tops out here as well with another lower high. That's an extension of that high time frame bearish divergence, which isn't very, it's not ideal in my opinion, but we can kind of just go down to the daily chart here and let's see if we have a better entry based on the low time frame. So this is kind of what we saw. Price stuck in this downtrend here. We came to this previous swing low, so the big liquidity here, and previous swing support, pivot support, sorry about that, coming down, breaking out, holding it here, and then continuing up from there. So again, this doesn't even look like a very good move. So we came up here, we started to print a bull flag structure. Let's take a look at our indicators here. We've identified that area of kind of support, sorry, that area of reversal here, or support on the high time frame. And we see we had a bullish cross of the vortex. We started to get a little bit more bullish momentum picking up on the DMI. RSI and MACD came from oversold territory, trending up. So we're seeing relief through here, through these 2 points here. So now we can zoom into the even lower time frame. Let's take a look, see what we see. Zoom into our bull flag. So we've got it here, and then we go boom, bull flag. We break out, we back test. That's your entry right there, 86,500 or 300. That's pretty much what we entered at on our trade tracker. So I think it was 86,500 is where I entered on there. But that's what I mean. If I didn't pay attention to those multiple time frames, I likely wouldn't have caught this little move right here, because as you flip up, let's look at the weekly again, you're going to see this move looks a lot less catchable here. So pretty much just straight up and to the right. That's why I say utilizing multiple time frames can really give you a better idea. And then also continuing on from that, let's say right now, if we're looking for that potential, we see this is the current low here on the daily. You can see a lot of support through here. We've pretty much, all through here. It's a bit of a trend line as well as that horizontal support. So you could have a stop loss underneath here. Ideally, I would prefer to have my stop loss just under the 50-day, just in case, price can come back and retag this level here. We're still pretty extended on the weekly. A more conservative price or a more conservative stop loss here would be at that 95 or kind of around 94, 93,800, something like that. But so that's kind of the theory. If we go down, we break below, the most likely price action is a retest of this level, come back, retest support, and then we need to just put in that proper reversal structure as we did kind of over here. So as long as price action is maintained, so we see here we had our breakout, initial stop loss under support, and we can just keep moving this stop loss continuously up. So if we get another little breakout here, it's continue up, then we can continue to trail that stop loss up as we go and then protect that position continuously. That's kind of my thesis when it comes to multi-time frame setups, utilizing a few different time frames, but ultimately there's going to be the most important one, which is the macro, the highest time frame relevant to that trade. So use the high time frame to identify, use the lower time frame, look for support, look for confluence, and use the lowest or low time frame to kind of look for those initial early entries. As you continue getting confirmation on the higher time frames, look to add to those positions, but do it strategically. Try to add on higher lows with that strong indicator setup. So thank you so much for watching, guys, and I'll see you in the next one.